Welcome to Pain and Profit. This is the place where we talk about the realities of trading, the wins, the losses, psychology, and the discipline it takes to survive in the markets. If you're serious about becoming a better trader, you're in the right place. Today, I want to talk about something every trader experiences at some point. The mental trap that destroys traders, even experienced ones. Every trader experiences this moment. Setups look perfect, analysis is clean. You've seen it work many times. Then the market does something unexpected and something shifts mentally. You stop trading the market and you start defending your idea. That moment right there has destroyed more trading accounts than bad strategies ever will. This happens to beginners. It also happens to experienced traders. It's not a knowledge problem. It's a psychology problem. The market doesn't punish bad strategies nearly as often as it punishes emotional decisions. As a day trader, I've seen this many times. I've experienced it many times. You see a beautiful setup, the structure lines up, momentum lines up, everything looks right. Enter in there confidently, but the market starts moving against you. Price starts moving against the position, and then that internal dialogue begins. It's just a pullback, probably a liquidity grab. Market makers are stop hunting, give it a little bit more time, it'll work out. I've said these things plenty of times. I'm pretty sure other traders have said this stuff plenty of times. Price moves closer to the stop. Okay, let's move the stop a little bit. Then again, then again. Your heart starts racing. You start getting more anxiety. You start feeling it. And now you're not even managing risk anymore. This is where the trader is defending their idea, not trading in flow with the market. And this happens so many times. What should have been a small professional loss becomes a catastrophic loss or something that can't come back from, account blown up. And it's not because the traders they don't know better. I mean, a lot of traders they train themselves to be able to manage risk. A lot of traders have blown accounts, but it can happen again and again because what happens is the mind it slips. So you got to understand, and this is the concept of invalidation. Every trade starts with an idea. So here's some examples. Buyers should defend this level. Looking at a level, this is a level that your trader's looking at, and the sentiment is that this is where this is great support, and buyers should defend this level. Where you get momentum should continue upward, right? Or liquidity should push price higher. Invalidation is the point where the market proves the idea wrong. The key here is professional traders decide where they're wrong before entering the trade. So plainly, no, it's not just setting a stop loss, whether it be whatever arbitrary number or dollar amount. No, this is actually an area on the charts where the trader says that the idea is wrong. So there's a psychology trap here, right? And this is where you get this validation drift. And validation drift is where a trader starts moving the level where the idea failed. Because the mind doesn't want to be wrong. The stop moves a little further, then further, and then further again. So the moment you start moving your validation level, you stop trading the market and you start trading your ego. And this is what most traders do. They trade their ego. I've done it many, many times, and it's so easy to just to slip into trading your ego. And you're not trading the market, you're fighting the market. And the market will always win. It will always win. There was a video I watched one time before, and the market was more you can't stay as solvent as the market, meaning that, the market is, the market can beat you up, beat you up, beat you down as many times as it wants, and it's always going to win in the end. So professional traders are not successful because they win every trade. They succeed because they control risk, respect and validation, and stop being wrong quickly. So the the thing here is that a trade idea is not a prediction, it's an hypothesis tested with risk. So you are testing the idea with capital, right? So it cannot work. And sometimes it doesn't work. And that's okay, right? So you just have to be okay with an idea not working. And this is what most traders miss. It's easy psychologically when you're right. You feel a little bit better, like you feel confident. But when you're wrong, and on top of that, you lose, and if it's a substantial loss, it can be detrimental to traders' progress. So I'm going to give you a couple actionable things you can implement in your trading to help you counter your ego. So before you trade, ask yourself three questions. What is my trade idea? Where is my validation? How much risk am I taking? So if you cannot clearly define where your idea is wrong, you shouldn't be entering a trade. And remember, this is different than a stop loss. This is saying, okay, this area of the support or resistance is an area that have a break structure, right? You know, um, if it's moving not when I expected, then my idea is invalidated. So reset and then come up with a new trade idea. So the market will humble every trader eventually, and they will humble you time after time. I've been there. I have the experience of being humbled time after time, you know, and it sucks, but it's part of the game. It's part of the profession that we've chose. So the question isn't if you'll be wrong. The question is, what will you do when you are? The goal isn't to win every trade. The goal is to be here trading years from now. If you found this value, sorry, if you found value in this lesson, make sure to subscribe and follow along as we continue building discipline in the markets. Trading isn't about winning every trade. It's about managing risks, respecting the process, and staying in the game long enough to grow. Thanks for spending a few minutes with me here at Pain and Profit. And remember, respect the risks, respect the market, and stay disciplined.